Investment opportunities during bear market? The current economic outlook is mixed and uncertain, depending on the region and the impact of the pandemic, inflation, and interest rates. Here are some highlights. The IMF projects that global growth will fall from 5.9% in 2021 to 3.0% in 2023 and 2024, as higher inflation and policy tightening weigh on activity. Inflation is expected to fall gradually but remain above pre-pandemic levels. The CBC reports that Canada and the US are facing a tough year ahead, with a possible recession, higher unemployment, persistent inflation, and rising borrowing costs. The Bank of Canada and the Federal Reserve have raised interest rates several times to curb inflation. The OECD forecasts that Brazil will grow by 1.7% in 2023 and 1.2% in 2024, as lower employment growth, high inflation, and tighter credit conditions limit household spending. Private investment will continue to rise but at a slower pace. The World Economic Forum says that there are signs of nascent optimism and the growth outlook has picked up across all regions, but there are also risks of new variants, social unrest, and geopolitical tensions. The stock market can react to economic uncertainties in different ways, depending on the type and source of uncertainty, the expectations of investors, and the policy responses. Here are some possible effects. Economic uncertainties can reduce the predictability of macroeconomic variables and affect the cash flows, discount rates, and monetary policy reactions of listed companies. This can trigger immediate asset price responses that reflect the surprises contained in scheduled macroeconomic announcements. Economic uncertainties can also increase the systemic stress and financial fragility of the financial system, leading to higher volatility and lower returns in the stock market. This can be mitigated by effective prudential and macroeconomic policies that enhance financial stability. Economic policy uncertainties can increase the crash risk of the stock market, especially during extreme crises such as the COVID-19 pandemic. This can be reduced by lowering the uncertainty of economic policies and providing clear and consistent policy signals to investors. Any thoughts if buying option puts on S&P 500 ETF Trust SPY, Invesco Trust ETF QQQ, and other similar funds be a smart choice? Please subscribe to know other interesting thoughts. Buying good stocks can be a good investment for several reasons. 1. Potential for capital appreciation. 2. Dividend income. 3. Diversification. 4. Liquidity. 5. Ownership and voting rights. 6. Historical returns. 7. Inflation hedge. 8. Professional management. 9. Tax benefits. 10. Accessibility. It's important to note that while investing in good stocks can offer significant advantages, it also carries risks. Stock prices can be volatile, and there is no guarantee of positive returns. To make informed investment decisions, it's essential to conduct thorough research, consider your financial goals and risk tolerance, and, if necessary, seek advice from financial professionals.